Good afternoon, and thanks for joining us for today's manufacturing panel and webinar discussion. My name is Janice Snyder, and I am your host this afternoon. So I'm a partner here at McKonly Asbury, and I'm a director of assurance services. So I've brought together with me three of our firm's experts in different topics and different areas, but what we all have in common is working with our manufacturing clients. So we're going to share some insights with you today. It's my job to keep us all on task from the banter beforehand. That could be quite a challenge, but we brought together some great topics for you. So we have Dave Hammarberg with us. He's also one of our partners here, and he's the director of our SOC and cybersecurity practices. So Dave, I've looked up before all the acronyms and initials behind your name and everything you've accomplished. At one point, I knew what they are, but I know you bring together the IT expertise, the CPA expertise, the information security auditors, and the expertise no organization ever wants to use, but if they need it, we're glad you have it, which is certified fraud examiner. So welcome, Dave.
Thank you. It's good to be here. I've been with the firm 23 years, partner of SOC and cybersecurity, and excited to be with this team. Hopefully we have some good conversation.
Great, thanks, Dave. I also have with me Brett Bauer, who's a principal within our audit team. He's also a leader in our manufacturing practice. And Brett, on those manufacturing clients, you get to work with me quite a bit. I'm not sure if that's a good or bad thing. Go ahead, Brett.
That's right. Yep. I've been with the firm about 12 years. In those 12 years, haven't accomplished nearly as much as Dave has, apparently, by the number of initials he has after his name.
Great, thanks, Brett. And Jeremy is a senior manager in our tax practice. Jeremy, you work with all kinds of manufacturing clients, large and small. Anything you want to say, Jeremy?
I'm just so happy to be here. I'm the relative new guy. I've been with the firm about 9 months, but part of such a distinguished panel. Hopefully I can keep up.
I'm sure you can. And none of us can answer tax questions, so that should certainly help. So thank you, Jeremy. All right, we'll move on. For those of you who don't know, McKonly Asbury is an accounting and business advisory service firm with offices in Camp Hill, Lancaster, and Bloomsburg, Pennsylvania. We provide a wide array of services listed there on the screen. I'm not going to name them. And we specialize in certain industries, and you can see manufacturing there is what we're here talking about today. If you've joined us on past webinars, welcome back. We're glad you've returned. If you haven't, we do these monthly webinars, which feature various business topics. We focus on different industries, but also different technical updates and tax updates and IT updates. So we hope you find them useful. I think you can also get to our slides as well if you need a copy of those. They are available via PDF. So we're starting off with the first question that we have to ask you is, do you want CPE for attending today's webinar? This will help us get those CPE certificates out within 2 weeks after the presentation. So please take a moment and answer that. All right, I think you just have a few more seconds. Want to make sure you have enough time. You do have to answer all 4 of our polling questions today, and this is the first one. So even if the answer is no, please make sure that you answer that. So 2/3 of you do want to receive CPE, so we will make sure that you get that. And thanks for answering our first question today. With that, we get to move on, and I get to ask the questions today. So hopefully I have the easy part to keep us all on task. We're going to move into our panel discussion. So Dave, it looks like you're first. So I hope you're ready, Dave. Dave, can you share with our participants today and a lot of those manufacturing clients, what are the top cybersecurity risks? Certainly when we're out working with our clients and we're out doing audits, we sometimes see a breach, we sometimes see something that has failed. It's always sad when we see that, but it's even better when they can catch it or correct those processes moving forward. So what are you seeing, Dave?
Yeah, when I wrote this question, I thought, man, I'll just pick one and I'll talk about the one. But, you know, it was, the more I thought about it, it was harder to just pick one. So really there's, you know, cybersecurity risks. So we'll talk about a couple here. One of the big things I see, and over 23 years, I've been to many manufacturers, all different industries, and a lot of industries have the similar cybersecurity risks. But one of the things that stands out for me from a manufacturer standpoint is just the surface area of what manufacturers have right now in regards to that manufacturing line, automation, Internet of Things, IoT devices, AI. So we're seeing a lot more, you know, we're seeing an issue with retention with employees everywhere, and manufacturers are seeing the same thing. So what are they doing to get by that and be more efficient, you know, bottom line, et cetera? They're automating things, et cetera. So we're seeing, you know, I'm seeing, you know, 5-10 years ago, people were automating manufacturing. So we've got devices in there that are running old operating systems. Now we're bringing in AI, you know, and we have so much that now is connected to the internet that service area is greater. I was reading, and I think this comes from IBM, that the manufacturers are more hit by attackers right now than the financial institutions. You know, and there's a reason that is. You know, supply chain, et cetera. So I think, you know, we've done a great job with perimeter defenses, but actually getting all of those devices on the manufacturing line, whether they're brand new IoT devices, whether they're 10-year-old automation devices, you know, securing those. You know, we could talk about zero trust for 2 hours, but everyone else wants to speak too. So, you know, how do we get everything secure in that area? So that's a risk. I'd write it down. I'd do more research. We can talk afterwards. The other thing that I think is an issue is, you know, it's not if, it's when you're going to be hit. You know, how bad is that going to affect you? You know, I see it in every industry, and this doesn't just hold for manufacturing, their lack of business continuity, disaster recovery, and incident response. And if they have those plans, no one knows what they say. You know, are you doing tabletop exercises, et cetera? So that is one thing that you should be on top of. You know, if you can get back in a couple hours versus a couple weeks, that might mean your business. And you know, if your manufacturing goes down, how many other manufacturers can't manufacture because you're down? So another risk, and another one. I'll just keep going until someone cuts me off. Phishing is a huge thing for every industry. And that is really the way into organizations. You don't have someone in the back room hacking in, you're phishing. You know, you're going to be phishing Brett, you're going to be phishing Jeremy on here, Janice, you're going to be phishing everyone on the line. You know, once they get in, they're going to move laterally. And it's a huge thing, security awareness. Everyone's heard the employee's the weakest link. We need to do security awareness training, and it's going to be becoming a huge factor when we get into AI. You know, we've trained employees all the time. Hey, look for misspelled words. Look for the emails not looking correctly. Well, guess what? Now these things are going to look perfect in every language because of AI. So how are we going to train employees the correct way these days? Again, we could have a whole presentation on that, but I know Brett's itching to talk. And then vendor management, my last one. That's a huge security risk. You know, what are you doing to check your vendors? You know, are you looking at the SOC 2? Do you have security assessments or checklists to go through? Are you letting anyone in the door? So I will stop at that and let other people talk.
My goodness, Dave, that is a lot. You've said many things in there, but one of the things you said that stood out to me is manufacturers are now targeted more than financial services companies.
Right.
That's amazing. What are they going after, Dave? Like, what have you seen? Like, I mean, I've seen, you know, they want that fake check. They want the payment. They want, but what else? I know there's more to it than that.
Well, there's governments, foreign governments going after supply chain. But by far, I think the phishing, you know, you're going after the quick payment, the ransomware. You know, how do you get paid? And those are, you know, and I think financial institutions really have been hit hard for years and years and years. And there's a culture in there of security. I don't think in manufacturers that really is the case. And like I said, I think the device is compounding on each other. When someone replaces something in the line, they don't usually replace the whole line, or at least that's what I've seen. So, you know, you have multiple things. How do you protect each one of those things?
I know you mentioned phishing there. I probably get 2 or 3 emails a day. I know a few of those a week are on our IT team phishing me. They're trying to trip me up, and they keep getting more and more sophisticated. But I know a lot of them are legitimate phishing scams, like education.
Right. I mean, we're seeing phishing to a degree that we've never seen before. And again, if you don't have in place something in your environment that is detonating those attachments, clicking on those links before it gets to the employee, we can't count on Brett not to click on that link. Really cannot. When I say Brett, I say all employees. They're going to click on it. Office 365 makes it very easy to sandbox emails before they get to their employees. When Janice gets an attachment, she has to wait an extra 5 seconds to open the attachment because it's scanning. You get it. That's the price of doing business, right? So it's scary. And I heard one coworker told me they got a phishing email and then they got a voicemail. AI took what they said in webinars and created a phishing voicemail out of it. So they got a phishing email and then they got a voicemail. And they checked on it, wasn't legit, but we're getting to that point where you have to talk to somebody. It's going to be crazy.
So we're being recorded, like maybe not just by us, but no.
It's your future voicemail.
It's always a risk, yeah. You also said, Dave, about we're seeing more and more robotics on the line. You talked about automation, you talk about artificial intelligence, and I know 10 or so manufacturing plants, and there are some robotics there, but now they're everywhere. Like you have the machine learning and you have things doing tremendous tasks throughout the plant. And some of that's necessity. We'll talk about labor force coming up later, but what are the risks when you're putting all those robotics and technology on your lines?
The risk is security is not the forefront or the first thing you think about when you put those on the line. You're putting those in the line to get your product out more efficiently, quicker, save cost, and a lot of times security is an afterthought. And how do you secure those? How do you authenticate those? If those are attached to the internet, it's a huge risk. And again, I don't think we're thinking about it enough when we're putting those things on the line.
Yeah, and I just had one more question on this topic, and we'll see if Brett or Jeremy have any questions or anything to add. You talked about vendor management, and I will say in the last 2 years, I've had 3 instances at organizations we've worked with where either the bank account information or the payment information was changed, the payment went to the wrong third party, or someone is impersonating one of their vendors and sending in invoices, and if you call the number on the invoice, they'll answer, they'll pretend to be that company. It's more and more sophisticated and harder to track. So what are some tips on the vendor management side? Because I've seen 3 instances of that in just the last 12 to 18 months.
Yeah, I mean, from an industry standpoint, I see a lot in the construction industry in regards to changing payment, and getting into the middle and actually receiving the payment instead of the accounts receivable of the organization. I think any important email like that needs to be confirmed, not just by replying to the email, but calling the individual. I tell my staff all the time, especially the younger staff, they just want to type, do Teams, pick up the phone and call. It's a great time to create a relationship, etc. But we almost have to get to this point these days to confirm everything. And if you're changing bank information or anything important like that, call.
Call the number you have on file, not the number they give you in that email or on that attachment, right?
So our security awareness training at McKonly Asbury is working because Janice said exactly what we say. So that's awesome.
Great. That is not my area of expertise, but I do have to be aware. And so does everyone. That's why you keep training us, right, Dave? Anything else you want to add to that, Brett or Jeremy?
No.
I'm going to have a lot of tax questions if you don't have questions.
I'm ready.
We'll leave room to grill Jeremy on the tax side, so we'll leave some time for that. All right, Dave, a second question for you. With all the improvements in security defenses over the last few years and all the ways you can train employees and all the safeguards you can put in place in your organization, I think I know the answer to this, but I want to hear all the examples you have to say. Do you see some of those risks going down?
Yeah, I mean, I put this in here because I figured I'd talk too much on the first question, and I did. So this is a fairly easy one. We've done some great things, but a lot of those advances are also advances for the attackers. So think of AI. As much as we use AI internally for security, for robotics, for all of those uses in manufacturing, to prevent downtime, et cetera, those attackers are going to be using AI to infiltrate your systems. So mostly that's going to go through phishing. There's going to be a lot of spear phishing in regards to, we're not going to be sending the same email out to 300 people now. It's going to be different emails to all 300 people, and it's going to be exactly this right grammar, whether that's 15 different languages. So it's we're seeing some fantastic stuff in security, but also the risks continue to go up, if not faster than the security.
Dave, I can't help but mention here, I know they keep getting more sophisticated, but several years ago, the IT department got me. I was in the process of renewing my daughter's Medicaid application. I sent all the information in, and 3 days later, I get this PDF about your Medicaid application. And I open it up, and it was stop. You opened an attachment you weren't expecting. I'm like, that is not fair. I was expecting that. But they get more sophisticated. It wouldn't be that hard to find out that my daughter's on Medicaid and I'm gonna have to go through this process. And like they got me, and fortunately it was internal. And I know not to do that again, but I was expecting that.
Yeah, it's unfair. But we put so much information out there, Facebook, LinkedIn, etc. So to spearfish someone is fairly easy, and it's just. If you're not phishing employees, you have an issue. Let's put that out there. But if you're phishing employees and you have 100% record of no clicks, you also have an issue, because that means your emails aren't good enough. You should be, I hate to say it, having some fails, because those emails should be really good. And then you have an opportunity to train that employee. Now, if it's one or two of you, I guess you could have 100% non-click rate. But you really need to design these emails as a teaching platform.
Dave, I do see more and more of our clients doing that and phishing their own employees. As much as I dislike it, I know it helps to protect us. I think they're doing that, and then there's very few organizations that aren't. So obviously you're recommending that, but hopefully everyone on the webinar is already there. But
yeah, I mean, there's quite a few vendors out there that do it well. And it's easy to do, and it all ultimately provides training when you click on it. So it's not a huge lift or a heavy lift.
Dave, do you recommend people not put as much personal information out there? Like, I know you can get your happy birthday, you get all these different social media ways, you get pictures, location trackers. Like, people could probably put together most of your daily routine almost to the minute for a lot of individuals, just because of what they share.
Yeah, I mean, our marketing department is the worst at it. No, just joking. They're listening on this call, so I had to add that. But no, I mean, 10, 15 years ago, I was like, don't put anything out there, and now we found that, hey, that is a tool for a sales, of an organization. So, you want to be careful what you put out there, but it's, LinkedIn, it's part of doing business. I don't think the answer is to not put stuff out there. For me, I don't put a ton out there. I guess, Janice, the question would be how much you put out there. Probably some people could put less. Brett probably has his whole life out there. He probably could put less. But you got to be careful. You got to think people are going to read it. My hobbies are easily found. And they could be easily fished. And I think, it goes down to, if you're phishing correctly at work, that's going to benefit your employee for personal email, et cetera. And depending on your organization, if you allow your employees to look at personal email and work email in the office, which you could prevent, you could get hacked the same way in personal email versus work email. So it's important to, even if you have the devices at work to detonate those emails, et cetera, and you're like 99% sure that Jeremy's never going to receive a phishing email. What about when Jeremy opens his Google account and clicks on that email? We still have to make sure that we're teaching.
Great. Thanks, Dave. My two big takeaways are you can't possibly educate your employees enough or have enough safeguards in place and enough controls and checks and balances there. And just the awareness that manufacturing organizations are now targeted more than financial institutions. So
Right.
that's my two big takeaways there. So, thanks, Dave. All right, we're on to polling question number 2. Do you think training through email phishing is effective? I already said, I think a lot of our clients are doing that already. A lot of organizations are, but let's weigh in and see what our audience thinks. Jeremy, do you think it's effective? You've been here 9 months. You're the newest person. So
We haven't given
No, I think there's lots of good information sharing on what to look for. You know, I've been
we need
in
to
other
wrap it up.
organizations
Good.
part of phishing exploitation, so it's good to be made aware of tactics and what to look for.
Great. See, so 91% says yes. See, I told you most of them are already doing it. So that is a good thing. All right. As we move on from our second polling question, I think I'm going to direct this question towards Brett. I think he's ready to speak on this. So we go out to many organizations over the last 2 years. I'm always hearing we have a shortage of skilled laborers. There's a shortage of skilled laborers in the pipeline. We do see that some schools and different educational institutions are starting to teach more skilled labor. I am starting for the first time in just the last 2 or 3 months to hear some of our manufacturing clients saying, we're okay right now. But I'm definitely not seeing that across the board. And there certainly is a lot of concern moving forward. So Brett, share what you're seeing. How are some manufacturers addressing the skilled labor gap?
Yeah, well, first I think it's important to understand exactly what the gap is. Here, a survey that was put out a year or 2 ago showing that by the year 2030, there would be 2.1 million unfilled manufacturing jobs. And that sounds like a lot, but to put it in perspective, that's 50% worse than the height of the pandemic. So I know a lot of our clients were really feeling strapped for employees. They didn't have enough out on the plant floor during March of 2020. Just imagine it getting 50% worse here in the next 6 to 7 years. That's why this is such an important issue for us to be talking about. It may feel like we're back to pre-pandemic levels now, but it is getting worse. It is going to be getting worse in the future here. The reason for that is there are a lot, but one is the turnover in generations. So we have millions of baby boomers set to retire here in the next couple of years who are not going to be replaced by the Gen Z group who just isn't attracted to manufacturing, right? They have a negative perception of these manufacturing jobs taking place in hot, dirty facilities, full of old equipment, lack of technology. It's a negative perception of manufacturing. So then, what are our clients doing to address this skilled labor gap? What are we seeing working? Again, there are a number of answers here we could talk about. I'll highlight a few. With regard to the aging workforce, I think it's really important to take some time to unload as much knowledge and as much information as you can from those experienced employees who've been around for 20, 30 years out on the plant floor. Have them mentoring those younger employees, maybe even if appropriate, get them involved in the onboarding process so that when they retire and walk out the door, all of that deep knowledge of the manufacturing process isn't leaving with them. So that's the first recommendation, taking care of those who are about to retire. The second one, going to the perception issue, the negative perception of manufacturing. See what you can do to improve your conditions. If you walk out onto your plant floor, is it hot? Is it dirty? Is it full of old equipment? Are there some simple changes you can do so that a prospective employee or during a plant tour, they step out onto the plant floor, that they can see, okay, this is a place where I would want to work. The third solution, Dave kind of alluded to this, and this is probably the most important solution to fixing the skilled labor gap, is investing in automation and technology. Automation is typically going to fill in those roles or cover those jobs that are most dangerous or most monotonous. Those are the jobs that you're already struggling to fill. So we're not necessarily talking about replacing or terminating employees. It's filling the undesired positions for the most part. I was listening to a podcast not too long ago, and they were interviewing someone who they equip drones with AI and have those drones go around the manufacturing plant counting inventory. So instead of having a team of people who are full-time counting inventory or part of the time counting inventory, they have one person managing a team of drones, which can count up to 10 locations per minute. So in that example, you have someone whose job all of a sudden became way more interesting, right? Because they're managing drones. That sounds much better than counting inventory. And two, that person's more valuable because they're overseeing some pretty sophisticated technology. And you have to imagine if they're more valuable to the company, they'll be compensated as well, right? So investing in technology. And then the last couple of things, it's really just summarized as focusing on retention. If we're really up against a 2.1 million job deficit in manufacturing in the next few years, minimum, hold on to the good employees you have now. Don't lose them. And a couple of things we're seeing work there is focusing on upskilling, right? Showing people that you can have a viable career path, show them the roadmap of what it can look like to stay around in manufacturing at your company. Show them, how you can send them to get different skills, like the inventory count person who is now managing drones, right? They probably didn't know how to manage drones or operate drones. They had to be trained. So look for opportunities to train your existing staff to move them up. And the last thing I would mention is always looking at compensation, always looking at benefits, unique benefits. I know my clients focused on that a lot the last couple of years, and they had to. But don't take your foot off the gas, right? Again, it's going to be getting worse. So keep benchmarking, keep looking at what you can do to improve the pay and improve the benefits. I'll say anecdotally, the one benefit I've heard mentioned a couple times from from clients is flexibility. That means a lot to their employees where they have more power over their schedule, whether it's changing to work 4 10-hour shifts, so they cut back on the commute 1 day a week, or more flexible schedules over the summer so they can be home a little bit more with their kids. Whatever it is, try to see if you can introduce more flexibility to your employees. I think that goes a long way. So those are some of the recommendations that I've seen clients implement pretty well. Janice, I know you work with a lot of clients as well. You're the panelist, so you're supposed to get out answering questions, but anything else jump out to you that I may have missed that you've seen clients have success in?
I definitely agree that flexible scheduling, you're definitely seeing that push across all industries. And I think some people got to work from home. I know that's a lot tougher in manufacturing, but the more flexible that you can be with your workforce, I would echo laying out those career paths, but even all the benefits, like you have to offer a whole package. So there's education, there's training, there's benefits, there's automation that you certainly should not be overlooking as we have a shrinking workforce in this area. The one thing that you pointed out, Brett, that this is an education piece. You said the negative perception that may exist with some manufacturing organizations and what that plant may look like or what it may feel like. We're out of a lot of organizations. That is not what today's manufacturing looks like. I think some of those are misconceptions. I know a lot of our clients do plant tours and they bring people in and they show them what's going on and just shifting that perception, but we see it in accounting and I see it in manufacturing too. You need to be in front of high school students, and that's just true in a lot of areas. You have to get their attention and say, we have an opportunity for you. Let's build that out and see what that looks like. Yeah. And I think that's where a lot of industries need to go.
Yeah, that's a really good point. A lot of this goes back to the high school level and the career counselors who push so many STEM careers, which are great. But manufacturing is trying to kind of lodge themselves into the STEM definition under the technology part of that umbrella term, which makes sense. Again, if you go to a smart factory who's implemented a lot of Industry 4.0 technology, that is really a part of a STEM career.
Yeah, and you have a lot of that automation, and you learn how to run that, and you're up to speed on technology. Like it makes you an attractive place to work, but it can also at the same time improve your processes, drive better bottom line, and address the skilled labor gap in a lot of ways. So it's a lot to do, and make sure you're thinking about cybersecurity as well, and educating your employees. I mean, you just keep layering all this on. There is no shortage of opportunities, right?
Sure. Yep.
I always say that when you think you're busy. Now, my life is full, and I'm sure everyone on this webinar is too. Your life is full, and you just got to figure out the best opportunities. So, Dave, you gonna say anything?
Yeah, it seems like 5-10 years ago, the answer to this question would be offshore. It seems like manufacturing is a lot more positive in regards to in the United States now. And I don't think anybody talking about this 10 years ago would have not said offshoring. So what, is there, and maybe this is Jeremy's question, is there a tax reason for that? Is the quality just not good in other countries? Why is the offshore not one of your answers?
I don't know if Jeremy has anything to add, but you're absolutely right, Dave. I know 10 years ago, we certainly would have been saying that. And I think that offshoring is still present, but I think it's in a lot more strategic or targeted ways, like this piece or this portion, as opposed to an entire process.
And I think there's been a big change. Some of it's coming back to the U.S., but a lot of it is just reshoring, closer to the U.S. So that the U.S., as I just said, we don't have enough people doing jobs, manufacturing jobs. So as much as reshoring might be nice when we have supply chain issues, we just don't have enough people to fulfill those jobs. So that's why you see reshoring being another alternative to onshoring, bringing it back to the U.S.
Why isn't it positive to just move the manufacturing process to China or Mexico? What's holding those people here?
We can all speculate.
Yeah.
I think it's gotten tougher. We saw the pandemic and supply chain issues and cargo ship issues and transportation issues and train issues. You see a lot of things happening with that. I think some of those things we have seen can be more challenging, and that makes wanting to stay closer more advantageous. But I don't know if there are tax benefits. Jeremy wasn't ready for that. We're having a nice dialogue here.
Yeah, I mean, there aren't any specific tax benefits at the present for keeping things on shore. Some of the things that have been in the past have gone away. I think really from a tax standpoint, more of it is going to be focused on how do we adjust our manufacturing because of the changes that have occurred, which I'll talk about soon, with as we're redesigning and outfitting or retrofitting our plant for technology or for robotics, how does that impact us? And are the tax laws now making us not want to keep them here, but maybe go offshore? Because our tax code related to research and experimental costs, which I'll be talking about shortly, have been a slight detriment to this robotics and reconfiguring, retrofitting our plant floors. And so if anything, it might be tax code is pushing us away because of some new laws that have come on the books here that I'll be discussing.
That's interesting. I mean, I've talked to some manufacturers, and I think the two areas that I think they have said was the quality as well as the supply chain issues. All through the pandemic, we had supply chain issues, and if you can't control something that is in another country a lot of times. So those are the two areas that I've heard from other people, but it's very interesting to hear from the group as a whole.
Thanks, Dave. I look forward to getting some of Jeremy's tax issues. So Brett, we're going to move us forward. So there's a lot of economic uncertainty. I don't think any of us would debate that. With rising interest rates, there's good and bad in that. With lots of inflation, good and bad in that. There are some manufacturers that got to take advantage of being able to increase their prices, ahead of or sustain them with where some of their supplies or raw materials are coming from. Also see some larger companies doing layoffs. We see that in the accounting firm industry, but the tech industry as well. I've definitely not seen that in manufacturing at this point. But Brett, what do you have to say about what are manufacturers doing to successfully navigate economic uncertainty?
Yeah, it really depends on which part of the economic uncertainty you're talking about, because we have inflation, we have rising interest rates, possible recession, supply chain issues. So there are a number of things we could talk about, but Dave asked too many questions on that last one, so we got to go. So the biggest thing I would say is we have seen clients in the last couple of years with high inflationary environment focus on utilizing Microsoft Power BI so that they could get real-time data on what their actual costs are as they're rising week to week, and making sure they pass along those costs to their customers without hurting their margins, right? So we have seen some customers adopt Power BI or something like it effectively, and that really protected those margins. Another thing I've seen various clients do is loading up on inventory, buying inventory in bulk. And they do this for one of two reasons. One, because of the inflationary environment, so they want to get lower prices while they can. Or two, they're worried about supply chain disruptions. And that's been less of an issue here recently, but it was relevant the last couple of years. The problem there is a lot of manufacturers don't have excess warehouse space, right, to store all these raw materials. So it's not a good solution for everyone. Plus, how much capital do you really want to tie up in inventory, depending on how slow your inventory turnover is. So that's worked in the past. I think we're soon going to be transitioning away from those high inventory levels, and people need to get back to a more normal inventory level, almost pre-pandemic. Other than that, though, I haven't seen clients really be too concerned with changing their plans, right? If they were planning on a building expansion, they're still following through with it. Even with interest rates going up a quarter point yesterday, that's not enough to scare them away from something that they've been talking about for years and planning for years. So typically the ROI is good enough that some economic uncertainty isn't enough to scare them away.
I agree with that, Brett. Thanks. All right. I'm going to move us forward. Polling question number 3, and then we get to focus on taxes. What impact do you expect AI to have on your company in the next 10 years? So we certainly talked about that a bit today. I think it's heavily impacting manufacturing, but I'll give you a few seconds to respond to that. What do you think everyone's going to say, Dave?
What is AI? No.
You said it a few times, artificial intelligence.
Right. I think it's, well, can't say it's going to completely disrupt our business. It's going to probably completely enhance our business. Even to the slide Brett just had up there, I think AI, whether it's forecasting when machines are going to break down or forecasting raw material prices, that's really going to be a change for everybody, no matter if you're in the manufacturing industry or whatever industry you are. So I think it has the ability to disrupt our business, but et cetera.
There we go. The overwhelming answer is increase in efficiency and cost savings. So I think that's true, but I'm kind of borderline about completely disrupting the business as well. So some organizations that's already happened to. So great. All right, on to the part I know, Jeremy, that everyone is just waiting for. I always want to know more about what's going on in taxes and how that can help our clients out. So I'm excited to hear this part. So Jeremy, how are manufacturers impacted by the new research expense rules? And you touched on a couple of things earlier. I hope you bring some of them back as you're answering these next 2 questions.
Yeah, thanks, Janice. So the research expense rules are kind of the hot topic in the tax world right now for those of us that live and breathe taxes. It's a good place to be, Dave. Hopefully someday you'll come. One thing that, just to give everyone background, what type of expenses are we talking about? So we're really talking about anything business-wise that we are using to create or improve a product or a process. The IRS defines it as, what type of costs that are we using or are we expending to eliminate uncertainty around a product or a process that we have in our facility. And so really, these are kind of viewed as the laboratory white coat research type costs historically. A lot of people sometimes think about, well, we have something called an R&D credit, which, if you are involved in a lot of research and experimental type activities, you can get a credit to offset your tax liability each year. And you go through this study and you evaluate what type of costs you have in your operation that would qualify. And so there's really two different sections of the tax code that deal with research and expenditure costs. One being the section that deals with the credit, which is a lot more, there's a lot more rules and qualifications around those expenditures. And so it has to be directly related with research, directly related with experimental items, whether it be salary or supplies. And to some extent, if you're using an outside third party to help you design or redesign something. And so you're thinking to myself, well, I don't have research and development credits. These new rules don't apply to me. Of course, we all say in tax, not so fast, or it always depends, right? So really the change that happened January 1st of 2022 is, as part of the Tax Cuts and Jobs Act that was passed in 2017, costs related to research and experimental activities were no longer deductible in the year they were incurred. So prior to January 1st of 22, we had different prototypes, or we were trying to redesign something, we just expended those costs. We deducted them our tax return. It was no big deal. Well, beginning in January 1 of 22, we had to begin capitalizing them. So that means that no longer can we take a current deduction. We need to capitalize them and amortize them over a 5-year period. So what that means is, now instead of getting say we have $1 million of expenses this year because of research activities, well, we can no longer deduct $1 million. We can only technically deduct 10% of that, or a half of a fifth, which is 10% or $100,000. So now we have $900,000 of expenses that we need to capitalize. And so you're thinking, well, what does that do? Well, if your effective rate is 25%, tax rate is 25%, all of a sudden you have a tax bill that's $225,000 more than you otherwise would have. And so this is impacting a lot of businesses, but in manufacturers in particular, we have to look at, well, what type of things do we need to look at? And so there isn't a bright line, this category of expense. It's really an activity-based. You have to look at it from an activity-based standpoint. So it could be salaries. Now benefits are included, overhead, rent, utilities, anything that is indirect to your research activity needs to be considered and capitalized. And you say, well, what type of activities are we talking about? Well, the easy ones, Dave and Brett both talked about already, robotics, automation. We're redesigning how our robotics work, or we're implementing a new robotics program. Obviously that is a new process. We might be, installing new software to monitor our machines or to prevent cybersecurity attacks. And the new rules state that any software development costs are now considered research and experimental, which was not the case previously. So there could be tremendous impact for manufacturing taxpayers around their taxable income and what they can deduct in the current year. Some other areas that might be impacted, you're testing the quality of your product or the quality of the material you're using, and you're trying to redesign what type of input you use for the material. You might be looking at different packaging or rates of filling. You're filling a package of the product you're selling, and you might be testing different speeds at how you fill it. It might be necessary to meet new regulatory standards, and you have to do testing to whether you can meet the standards with your current equipment or whether you need to redesign something. There's a whole host of things that could impact the deductibility from a tax standpoint from a current year. Now, this isn't to say that in the future it's not deductible. It's just, unfortunately, you have to spread it out over 5 years, 6 years really. So
this as a lot of our clients, and I know that my opinion doesn't matter, but I don't like this. I'm spending a lot of money today, and I'm going to get taxed because I can't deduct it today, and I've got real cash going out the door, not only to spend money on these research expenses, and now I got to spread them over 5 years, and I got to pay a higher tax liability. I mean, this is costing me a lot of cash. And I know, I'm sure all the business owners on the phone say, we don't like it either. But wow, the cash flow impact of that's pretty devastating. Is this like a done deal? Because I was just on a call last night and they were talking, this is section 174, right? Like, I'm trying to pretend I'm a tax person here. I'm definitely not. But it was all about what's going to happen with section 174, and we hope it gets changed, and we hope something happens. And I know hope is not a good business plan, but I'm sure maybe everyone else is well more informed of this than me, but I mean, I don't like it.
Yeah, well, and that's been the hope. That's honestly, Janice, that's been the hope for the last number of months, almost a year actually. And this has been coming down the pike since 2017 when the law was first passed. We've known about it, but we were just kind of like, they'll change it, they'll change it, they'll change it. Well, here we are at the end of July 2023, and we have clients that we haven't filed tax returns yet because we're hoping it's changed. It's probably not going to be changed in the near term. Both the Senate and the House have competing bills to address this issue, but we all know the likelihood of that happening is not very high at this point. So I think for now, this is just my opinion. I have no insight, but I think for now, for 2022 tax rules, I mean, this is the tax rule of the day, and we just need to continue, hopefully, meeting with our folks, that trade groups, lobbyists that can help spur some of this along to show how much of an impact this has become for cash flow and for that tax liability that you mentioned. And kind of to dovetail in with what Dave was asking earlier about offshoring, part of the issue too is that some countries, they give their manufacturing industry kind of extra incentive for doing research and experimental costs. So you have an extra incentive. They get a plus deduction, if you will. And so that's part of the discussion. The other side of this is the new rules say that if you have research activities outside of the US, you actually have to capitalize and amortize that over 15 years, not 5 years. So then it's, if a US-based company, US-based taxpayer has, research and experimental costs that are outside the US, it's actually a longer time horizon to deduct it. So there's a lot of nuance. There's a lot of gray areas. There's a lot of concern within tax world with professionals who are working with this every day about how to even come up with the costs that are applicable, because unfortunately, of course, there's not a lot of regulation and tax law out there to test this, and so we're making some modeling and documentation around activity-based areas so that we can really prove why we did what we did.
I hope there's some good news in here, Jeremy, but honesty is a great policy, and we'll continue to hope. But How are manufacturers impacted by some of the state tax exposures too? I'm guessing this isn't good news either, but yeah, I'll let you.
Well, I mean, I think, yeah, I think just a reminder, states have become a lot more aggressive in their pursuit of, enticing taxpayers to comply with tax laws. A lot of states now, they'll send out questionnaires, and to the unknowing, taxpayer, they get a questionnaire in the mail, they fill it out and send it in. Well, 2 months later, Alabama is at their door because they filled out the questionnaire and answered some questions that they thought were innocent enough. And now Alabama says, why have you been filing tax returns here for the last 5 years? Nothing against Alabama. It's a great state. Dave sings Sweet Home Alabama every day in the office. But a lot of states are just becoming much more aggressive. And part of the thing too is for people to realize that, well, I don't have any activity in the state. I have sales, they order stuff, I send it to them, I don't do anything there. Well, during the pandemic, a lot of employers allowed their employees to work remotely. Let's say, Betty in payrolls, she moved to Georgia to be next to her grandkids, and the company allowed her to stay there. Well, now that Betty's in Georgia, guess what? You might have to file in Georgia now because you have you have activity, you have a business reason in Georgia now. And those sales that you sent to Georgia that may not have been taxable in the past now all of a sudden become taxable because you also have an employee there that's doing payroll for you, and it's not necessarily exempt activity. So there were a lot of states that had exemptions during the pandemic that allowed employees to work remotely without having them to be taxed, but those exemptions have now expired. And so to the extent you may have employees in other states or other activities, you may need to look at what activities may require you to file in those states. And it's not just income tax, it could be sales and use tax, it could be other franchise taxes. There's a whole boatload of taxes that some states have that could be applicable in this situation.
I definitely think states are getting more aggressive, like you said, and clients are getting inquiries all the time. So it's definitely something to be aware of and cautious in how you answer those questionnaires, right? Can end up with some pretty significant tax liabilities.
Yes, those questionnaires,
but
right. Those questionnaires can definitely be Pandora's box. So you have to be careful of.
Great. So I'm sure we have some comments for a few more, but our polling question number 4, as we're coming up to almost the end. Have you recently reassessed your state tax exposure? So you guys can go through and answer that. We'll be quiet for a moment. Jeremy, are you seeing more and more organizations take a closer look at this? I know a lot of times when we're doing tax returns and we're talking with companies, it's kind of an annual process, but it can almost be a continuous process, right?
It's a definitely continual process. I mean, we have a lot of clients that when they get those questionnaires or notices, they forward them to us and they say, why did I get this? And so we have to kind of understand what they're doing or what would have triggered that specific state for sending the questionnaire. So yeah, we look at, it's a very ongoing process.
I love it. There's a lot. We are fully compliant with our state filings. Great job. That is hard to do. And we operate in only one state. So that makes it easy, but that could be tricky too, right? Depending on where your products are going. And hopefully you don't have any employees that are crossing over state lines or working from another location as well. Any other pitfalls that come to mind there, Jeremy?
Yeah, no, I mean, it's just the traditional ones. Obviously, you have a new facility or new growth opportunity, and you have a new office or production or even a warehouse. Brett mentioned inventory constraints. People may have inventory or warehousing in another state, which they may not realize, is then an issue for state tax filings and compliance. So, as we change our business models and we, move into other states, we just have to be cognizant of what we need to do to stay compliant with state tax law.
Thanks, Jeremy. So we move here at the end into a live Q&A. Like we said, if you have any questions, please send them in. So I think we've had some good dialogue going here today, but I don't know, we have some lightning rounds set here. I don't know if anyone can answer them in 30 seconds. Quick, Dave, cybersecurity, what does the future look like? Is that that's not a 30-second question, but let's give it a go.
First, I got to unmute myself. I was going to say it looks more positive than the taxes look. There's going to be increased risks, and I think we have to relook at things and how we do things from a security awareness training. That's my 30-second answer. 30
seconds. There you go. Brett, what new accounting standards will impact manufacturers?
I'm going to take a minute here, if that's okay. The short answer is not really much. So if you're used to RevRec and the lease standard, there's not much else coming. If you do have crypto, the final ASU should be coming out by the end of this year, basically telling you to measure it at fair value. If you're a publicly traded company, which I don't think we have any on the call, but there is a new disclosure requirement for publicly traded companies, which affects every manufacturer. You have to disaggregate your income statement expenses, breaking out cost of goods sold, rolling forward inventory, things like that. They have some specific examples out there on the FASB's website. And then lastly, leases we mentioned, if you're a 930 manufacturer, we have a few of those, or some that are 1030. You haven't adopted the new lease standard yet. That's a massive undertaking. Please talk to us as soon as you can. I'm happy to help you.
They've all already done it, Brad. I feel confident in that.
I don't know.
Sure. Thanks, Brad. But Jeremy, recent tax law changes, you got 30 seconds. So we're going to wrap up on time.
So real quick, bonus depreciation is starting its phase out period beginning here in 2023. So it's no longer, under current law, it's no longer 100% deductible bonus depreciation. It phases out 20% each of the next 5 years. Some other minor limitations with interest expense add backs. There's some additional credits available if you retrofit or have energy efficiency components installed in one of your buildings. So there are some things out there, but really, as I've said, everyone's talking about research and expenditures right now. So this other stuff is fairly minor.
All right. Well, in closing, thanks so much for joining us for today's webinar. Hopefully you got one or two good takeaways, some food for thought, things that you can consider that could help your business going forward. Hopefully you laughed a little too. I know we had a good time and we enjoyed, and we are glad you were here with us today. So a recording of today's presentation will be posted on our website and social media sites in a few days. And for those of you who requested CPE and answered the polling questions, those certificates will be sent out within 2 weeks. That concludes our webinar. If you have any questions, feel free to contact any one of us. I think you understood our expertise as we talked here today. So we'd love to hear from you. Have a great day.